The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, the koala bear of Wall Street. Just a big teddy bear of a trader. And we've got a market that does not fail to chop out here, up 13 points on the S&P cash. We've got 1.66 billion shares. So again, starting to see all that volume go light. We've just had the Fed president give some speeches earlier this morning. And of course, we had not the beige book, but we had the minutes of the last Fed meeting come out. And I can't really see that it did a whole lot other than pretty much looking over here at another computer. Yeah, I don't see a whole lot out here, maybe a point or something. It's pretty much just doesn't matter. So it is a wonderful day out there. So other things that we have going on here today is, what else? Well, I guess we can just get on with it because it is a quiet and it's an interesting day. Today in 1881 in Washington, D.C., humanitarians Clara Barton and Adolph Solomons founded the American National Red Cross, an organization established to provide humanitarian aid to victims of war and natural disasters in congruence with the International Red Cross themselves. And, of course, kind of really came out of the Civil War and some of the other wars out there. But it is probably a gracious day, especially for those people that went to war or had famine, other kinds of problems. But other than that, what can you say? Anyway, we've got a interesting day setting up here. When we go around the world, the FTSE was up 0.3, Germany was up 0.6, France was up 0.4, Japan's Nikkei slipped 0.2, Hong Kong, basically the Hang Seng ended flat, and China's Shanghai Composite was up 0.8 of a point. And we get around, I forgot to do something here. Yeah, we get to some earnings, and just going to take a quick look at some of these while we have a chance. And I forgot to do something, so I better do it now. And hopefully we'll pop it up here. What do we have here? That's it. So we can go back to the previous one here. And that's what it was. No. That's what it was. But,
you mean spam? Lovely spam, wonderful spam, lovely spam, wonderful
Hormel came out with earnings and reported less than a savory second quarter profit, issued weak guidance, driving shares down early on Wednesday. Of course, I looked at these about 1:30, and we'll look at the actual charts here after I'm done going through the bigger part of earnings, but off basically 2.2%. I was very interested in this one, other than playing the Monty Python bit, that when I'm looking at these companies, I'm looking at how many of them are talking about the higher rates for food. Of course, Hormel did not fail to disappoint. They're citing the rising cost of chicken, beef, and pork for lack of growth in their EPS guidance. And, of course, off 2%. Not a huge move, but pretty much exactly what you would think with the way that the markets have been moving in commodities. Spam is a rare delicacy in the state of Hawaii. Well, of course, I grew up in Hawaii, our engineer stating the obvious for someone who spent 10 years. And no, it isn't a rare delicacy. There was a huge pile of Spam left over in the Second World War, and they were eating it into the 60s, and it was still from the 40s when I was there. They had Spam for breakfast, Spam for lunch, Spam anywhere, just because there was so much Spam left over from the Second World War. And they still eat it there. It's not a delicacy. This is something that they got used to eating, and mostly because it was free. And not a whole lot more to say about that. And yes, they put it on pizza and other things, but Spam is just part of what Hormel is, not everything. Of course, when we get to Tiffany's, they had a huge move out today, up 8.5%. Gapped up on sharply massive volume on the luxury jewelry, raising their full-year guidance. Now, what's going on in Tiffany's? Huge amounts of buying from the Chinese. The Chinese will not allow the huge McMansions that we have, and they are spending, at least the nouveau rich of China, are spending their money on things like smartphones and cars and everything but housing. And that means that the wifeys are getting lots of diamonds, a girl's best friend, and it's mostly been the foreign buyers that have come in, especially into New York and some of their stores in Asia that have been doing gangbuster business. But that's pretty much it. They don't have anything to spend their money on, and they're spending it on what they can, and that is right up Tiffany's alley. And getting around to it, we are talking about Mr. Intuit. Dropped after the company reported adjusted earnings per share from continuing operations. Missed Zach's estimate consensus of $3.50, and earnings increased 18.8% on a year-over-year basis, and they were up mildly out here, but no one's thinking much about Intuit out here. Doesn't seem to be getting out of its ways. Sales farce. CRM shares off about 5%. Like I said, almost all these I looked at right around 130, 140 today. And kind of interesting, a lot of people coming out and talking about lowering the price targets on CRM, mostly because just the big guys are really blowing out a lot of the hosting and really hurting the opportunity for sales farce to actually make any money. Very hard when you're going up against Microsoft, Amazon, and Google, who can all give away a huge amount of these services. Same problem that CRM has, that Rackspace has. CRM a little bit better. They can give away some services and charge for their software for managing the cloud, but they're dropping basically 10 to $25. Most of them are dropping the projections for Salesforce's numbers in the future, but 5% probably fairly good. PetSmart, another one down 8% this morning. PETM is the pet-centric retailer. And we can get into the weeds, but basically what's happened is the growth is weakened for them. They are also going to have higher expenses as they quit buying anything from China, because apparently if it says dog food in it, it can be radioactive waste, it can be sawdust, it can be everything but whatever people were supposed to be buying for pet treats and food. And I think a lot of people, even though that was kind of was buried, not in the lead, it looks to me like a lot of their expenses are probably going to go up over the next year as they get rid of anything from China, and especially for little doggies. But they had a lot of problems with doggy treats and other things and toys but they're going to be getting out of the China business fairly quick, and they think their expenses are going to go up fairly, probably 10, 15%, and hopefully they'll be able to pass through as many of those expenses that they can, but they do know that it is going to be higher. Booz Allen is off the wagon here, almost 10%. If you don't know what Booz Allen, think about the NSA. This is the company that the NSA has contracted. It is the company that the freedom fighter who basically ratted out the NSA for all their wireless wiretaps when they went before Congress and then lied again. He came forward and basically dropped all the documents. And what can you say? Wells Fargo believes the investors who are expecting another special dividend announcement from Booz Allen were disappointed when the company raised its regular dividend by 1 cent, but indicated a special dividend is now a second priority behind cash acquisitions. So 10% lower, mostly because they're going to be spending a great deal of their time. I'm short Netflix on a retracement polar. Can we look? And I almost was. I actually wrote in my newsletter this morning, I'll look at the Netflix chart a little longer or a little later. But I was almost ready to pull the trigger on it when somebody, who will remain nameless, is a frequent guest on CNBC and was on their show this morning, said to short it. And the problem is, I already know now that when he said to short it, there's going to be a bunch of numbskulls in, and they're going to be extremely easy to squeeze. So I would wait for the next squeeze for those folks to get squozen out. And it would be different, but unfortunately, this guy is, enough people follow him. It's like Kramer. It may be the stupid move, but in the short term, they have enough sway to move it. And right now, I have a feeling that the problem is that Mr. I'm buying gold in yen terms, crapola, is probably going to move that stock up by saying short it, mostly because the weakest hands are going to be short. And, of course, nothing worse than having people short a stock that don't know what they're doing. And I have a feeling that he probably moved enough of them. His short call didn't seem to do much this morning, and I'll look at it here in a little bit, but I think it was up about $5. But yeah, it's everything you want, and the reasons why he outlined are perfect for shorting it. Unfortunately, I know it's going to be very easy for operators to run that stock with a bunch of weak-handed shorts in it. These normally, when you get a big prognosis to go short on CNBC from a noted analyst, problematic at best, because their time frames are vastly different than the time frame of the retail consumer. Anyway, we'll be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, and tomorrow night after the bell, of course, what everybody's going to be waiting for is probably the real last company coming out for earnings that's really going to move the market, and I don't think it's going to. I continue to look at the options for Hewlett-Packard. They look to me like it is going to be light as far as movement. They're really not looking anything more than about 5% on it, which means that most likely it's probably not going to move more up or down than 2.5%. I think that especially since Meg Whitman has done such a fine job of turning this around, she's going to get a great deal of leeway probably for the next year. So I'm not going to think that you're going to see a huge difference come earnings time, even if it's good or bad. I think we're going to see, I think most of the good is in the stock price, unless they have some kind of huge surprise. Of course, they're talking about adding several hot button sectors to their sales this summer. Somewhere in late June, 1st of July, they're supposed to be adding 3D printing, which is right up their bailiwick. You know, perfect for a company that works with consumables like ink and laser jet toner like they have before. And, of course, stepper motors, which move the print heads around, pretty much the same kind of technology in printers. Now, what HP has said is they're going to work very hard at getting print times down. No one's probably in this audience, besides me, has probably ever printed anything on a 3D printer. If they're of any size at all, print times can run 4, 8, 12 hours. It's not beyond the scope of something to run that long. So you just have to take a look at it. The rest of the business, I have a feeling she's probably going to talk about more layoffs, trying to get rid of more parts of the business. And my guess is that the worst part of the business, which was the PC business, has probably improved a little bit. So I think maybe there's a little positive bias in that whole business, but we'll have to take a look at it. And I think that's about it, as it is a mad market. Okay. So what else do we have going? Oh, I wanted to look at the charts of a lot of these that we did talk about. So we'll go to them. We'll start with HPQ. This thing's up in an upper trading range. And I think, before I correct here, hang on a second. There we go. You're probably looking at earnings. I'd be very surprised if it goes over $33.90, which is the April 10th high out here. And you're looking at $31.43 as the low. And I bet if I went back through the options on this, that's probably right in the range of where these options are predicting that HP will be in. That sets up a Friday for very light volume. If we would continue to go back and close back up at the highs, I would be very interested to see that light volume and probably setting up the next leg down in this market. And of course, we've talked many times about how 3-day weekends set up a change in the character, if not the direction of the markets. And we continue to see that more than any time over the weekend or over the summertime. I have a feeling that's because everybody gets together and they start talking, forming opinions, especially with people that they normally don't spend a lot of time with, relatives, and just people around the neighborhood getting together. Some people, going and seeing their loved ones. And I guess Christmas, there's so many things going on, the travel, and that tends to be long-range travel. And big Memorial Weekend, people going to the beaches, a lot of people going with friends and family that are a little closer. Maybe that's the reason why. Hard to say. I can certainly say that the character changes. If it is a choppy market before, and I'm going to call this a choppy market, then we tend to get a trend out of that. Whether that trend's going to be up or down is going to be kind of tough to say. I would have loved to see this market just continue up every day a few points on light volume. We've had some volume down. We've had lighter volume up. Again, another day like today where we don't have the market truly moving that far is tough. The other thing is I'm seeing way too many people shorting this market or talking about it, and that's why I'm thinking we may get a spike and those people washed out before we turn. We'll talk more about that when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we were talking about HPQ and the fact that we are seeing, at least me, I won't say we, I am seeing a lot of people talk bearishly about the market. That is I wanted to be and hear a lot of people going into this weekend talking about sky's the limit and not getting that much. And one of the problems I see going into this weekend is a lot of people that are short, or at least they're saying they're short, on the financial infotainment cable stations for finance. I dislike that because I'd say 80% of the time the market doesn't break while everybody's watching and waiting for it to break. And people that are long a stock want to get out of it. The easiest way is to come up with some bogus news story and pop it 10, 15% and run all the shorts out of it. Not only do you get more money out of it, you find willing buyers to sell it to. I know the market is weak, but I still don't think it would be beyond the scope of reason to see maybe a 30-point bounce one morning in the S&P cash on the upside. And if we get up to the top and anything doesn't happen, then that's fine. But the problem for me would be being within 10 points of the highs without going back and trying to get maybe some kind of decent signal off the top. We'll say if we could bust 1900, have a ton of volume come in, make sure that it's all short selling volume, that really the volume dries up very quickly, we'll say in a day or two after margin sales are over, And maybe that third day that normally you would get a lot of volume and a continuation move, you don't get that. And to me, that would be the absolute perfect setup to short this market. One of the other questions we had on here was Netflix and FLX. And yes, a perfect setup out here, high up on lighter volume, especially compared to the last major high on April 22nd, where this thing is basically about half the volume of that today as it broke through 380. You wanted to see some kind of sign of strength. Now, what we're really probably looking at is the retracements off this larger high. It also had kind of a confluence level between two higher levels, and of course it was rather wide, so it acted more like mush than it did a serious long-term racket. But you need to get to, 397 for the 618, and this is a stock that certainly can do it. But again, like I said today, when we saw maybe somebody in the den, I'm just having a mental blank on the guy that's always talking about being long gold and yen terms and what's his name? He was on Andy Heck's show, big commodity guy. Dennis Gartman was out there saying, well, I'd have to sell and short Netflix this morning. I thought that was the kiss of death. I wanted nobody to mention it. I wanted everybody to go, Netflix is back up again, and that's it. But when you get somebody with enough followers like him, you can get, especially on CNBC. If he did it just in the newsletter, I probably wouldn't think much about it. But him coming out and blowing about it and calling it a can't miss short almost always means it is a missed short. You got a couple of people that can move markets, especially for a short amount of time. He's one on a specific stock that can do that. Sometimes he can move gold for an hour or two. I have a feeling that him and Kramer together can probably push this back up even a little bit higher, and it can still fail. You'd love that 618 to come and go with a very light volume. But again, we are going into very light volume in the next 2 days. We are waiting for probably the last bit of data before we're going to go into that weekend. I can't see a big move out of here before then. So I would just assume that it would continue to step up and get a lot of the shorts out of the stock before the long weekend or even into Tuesday next week. In fact, I'd love to see a nice reversal day out of this thing where it did jump up 20, 30 bucks, ran all the shorts out, and you saw just no volume for the last 10 bucks of that. So maybe it jumps up 20 bucks and you get a ton of volume in, and it just kind of goes up another buck all day long, and you get little or no volume. Maybe it adds 1.5 million shares the rest of the day, and you go into Friday's close like that. To me, that would be a much better and less risky short out here. The problem is if Netflix was a horrible company and no one wanted to use their product, it would be different. So you're basically fighting a war with other investors on a valuation issue, and those are very tough to ever prove. A lot of people have Netflix. They love it, and people love owning stocks that they know what they do. And Netflix is not a lot of mystery. Everybody knows what it does, and probably one of the reasons why its valuation is so astronomical now. There are other stocks like that. Tesla, astronomical. But to me, you really want to see, especially these high flyers, you want to see the people that are already short really take it in the shorts, and just that last gasp, a death rattle at a higher price. And it is tough to see it. But those are the two things. I was praying no one would bring up Netflix during the show today or during into Friday, but brought up a lot on financial infotainment, both on Bloomberg, CNBC, and Fox Business News. So to me, I love stocks where people aren't bringing it up all the time, where it has kind of been forgotten. And I think just a lot of the press is probably going to be enough to keep this thing up for 3-4 maybe 5 days. So we'll watch this, but you want to see a day where the volume starts off very strong in the morning, and this thing just goes up 5, 10, 20 bucks with no volume, and then gives you a reversal the end of the day. I can't tell you that's exactly what it is, but I have a feeling that that's going to be the only kind of risk-reward setup that we're going to be able to get on that. No one's talking about Greece. Should we short? Is there anything left to short in Greece? I think that would be the question. Somebody in the den asking, because no one's talking about Greece, should we short it? Certainly that's a much better plan and thought than shorting something that everybody's talking about now. The Greeks. We can talk about it. Anyway, so we've got an interesting day out here. I've got some of these stocks. When we look at these high flyers that did break without the market and still are, we've got some that are setting up some ABC downs. I don't hear a lot of people talking about Tesla. Why it's mentioned, it isn't, people aren't like stalkers, waiting around the corner every minute on this thing. It gapped down on heavy volume. It's coming back up to a level of confluence. I would like this confluence level to be a little tighter, but between 203 and 210, you do have a nice confluence level in that. And if you could get back up probably in that 203 range, that would give you a 618 of this last move from 219 to 177. And to me, I would really like seeing that, which is a little bit better. So we can see. But there's several of these stocks. Of course, this one actually acting a lot weaker than Netflix. And I have a feeling just because everybody pretty much knows that the valuations on this is pretty astronomical. And we've also seen a lot of people that probably the Tesla hysteria a lot harder to keep up once all the people that have bought a Tesla that would buy a car that costs twice as much as like a good BMW, but going to cost them a whole lot less because in 4 years you're going to have to buy a $20,000 battery pack, or Tesla, the company itself, is going to have to buy a $25,000 battery pack is problematic. Okay. EEM Polar. Can we look at it? Of course, you can give me a call at 877-927-6648, or you can also email me at path@tfnn.com. Did I get get a free issue of Redmond Magazine? Okay. Just going through my mail here real quick. And, of course, you can post a message like Pete B has in the den. Emerging market shares, okay? You're up against this previous high that had 80 million shares with 70 million shares. Makes me think that that isn't as a clear signal as I would like it to be. And, of course, it still has 9 cents to go. So you would love it to break the 4309 and see something like 50 million shares. So maybe we see that in the next couple of days. Anyway, we're looking at the EEM, which is the Emerging Markets Index. And we're very close to that high, but we haven't proved the point. We haven't gone through it. We haven't done it with significantly lighter volume. 10, 15% lighter shares, good signal. To me, 20, 25 million shares lighter would be a fantastic signal. And normally that's where I look for stocks, and that is that. Now, the question is whether or not we've got a nice Gartley out here. And you did have a nice Gartley, and you can kind of look at where they are. But I think you can't. You had enough of a retrace off the D to this low at 425 that, to me, that's where the Gartley was, and it's over. So, to me, you had too much of a retracement here to call that pattern a D into 4 days ago, which I think is what you're talking about. So to me, could this be a butterfly? I don't think so. I think the pattern ended on April 9th with the D pattern, and that's it. And that's about as far as you wanted to go into that pattern, and it's gone back through it and higher. So to me, what you're really looking at is a test of that 4309, the November 18th high with 80 million shares. So I don't see too much difference in it. We're going to look at some stocks here. We still have plenty of time left over. We've got a phone call. Let's go to Paul in Boston. How you doing today, Paul?
I'm doing good. How about yourself?
Another day in paradise.
Yeah, that's right. Anytime you're on this side of the dirt, it's paradise.
It is. Well, today, I really have to say that normally by the time we get this far into summer down here, it's really gotten hot. And we've had some nice breezes, and as long as you're not in the sun, it's very nice down here.
Yeah,
so it's pretty good. Athlon Medical, AEMD.
Yeah, it's something that you were talking about a while back, and it's the filter. They have the filter for the hepatitis C.
Oh, a Hep C drug?
Yeah, no, it's a filter.
For what?
To clean up hepatitis C, Exosom's cancer.
Was I talking about this? I don't remember this one.
Well, you're the guy I heard it from, and I
I talk a lot. I don't necessarily remember it all. Athlon medical device maker focuses on creating devices for the treatment of cancer, infectious diseases, and other life-threatening conditions. Develops, I did take about this. I forgot about it, though.
See, I have someone in the family that's very sick, so...
Yeah, it's a chemo purifier. I know that the other drug to get rid of
Hep C.
A and B and C is available. I'm wondering what it does to this.
Yeah, I know.
Hepatitis C virus, human. Go ahead.
I heard one of those drugs, the drug company, I don't know which one it was, but I had heard that the drug company can't make any money on it. It's too expensive.
That wouldn't be beyond the scope of reason.
Yeah.
I know it was $85,000 or $95,000 for the entire run.
Yeah.
To cure hepatitis C, but they were looking. Oh, I now remember this. This isn't the company that's making this, though. They're just making the filter.
Right.
Yeah. The other company, I think, is when I said that this one was problematic. Pandemic threats all develops. Also research diagnostic tools that identify and qualify exosomes and a medical device to reduce the incidence of sepsis and combat injured shoulders. Founded in 1991, is based in San Diego, California. Okay. Well, I tell you what.
I know they're not making any money. They just got approval for a device exemption from the FDA, and they're also going to file another exemption for the cancer research, and I'm hoping that it goes.
Okay. Well, I'm going to read through this during the break if you want to hang on. If not, talk a little bit more about this after I've read the news on this over the break.
I'll just listen to you.
Okay.
Okay.
Be back in just a minute. Thanks for the phone call,
right.
Paul.
Have a great day.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, so we're going to dig into this just a little bit. Gilead Sciences, of course, makes the drug. It's $1,000 hepatitis C pill. I think the entire course takes 6 months, if I'm not mistaken, and runs about $95,000. Untreated costs are going to be at least $500,000, if not $1 million over time. Now, the Athlon Medical makes this hemopurifier filter. Now I'm starting to remember all this. The issue with this is it works on a great deal more than just hepatitis C, but it won't cure it. So even though you can help it, pretty good deal. Probably the thing that would be interesting is if they can get this to actually work on blood diseases like leukemia, some of these other ones, and help get some of the cancer out of bloodborne diseases. It's unclear from what I was able to read just during the break that they can. Biggest problem with this stock is it is a 20-cent stock, and maybe that filter works out. I hope it does. But to me, Gilead making monster profits probably the better bet at this time. So anyway, we're going to look at a few other stocks. I wanted to quickly go to Oracle, especially with HP coming out pretty quickly. They have tested the high. They've done it on lighter volume. The April 1st high at $42 with 35 million shares was exceeded by 20 cents on May 19th. It's closed below it, and of course it did it with 35 million compared to 19 million shares. So very tough. Now, not a lot of volume in this pullback yet. I suspect, and normally what you want to see is within 3 days of testing a high that you get a major failure. So we're 2 days into that, and I'm not going to grant that 50 cents off the high is a major failure in Oracle, even though it's failed already on volume and it's closed below those levels. If we weren't going into a 3-day weekend into the summer, I'd be short already. But again, when these things float around, especially when they get time to float around, it's not uncommon to see these things come out and bounce the wrong way or break out the wrong way. And it happens enough, 70-75% of the time, that you get a head fake when these things just hang around for a while and don't instantly fail. Along with going into a long weekend and the lighter volume, awful hard to get a stock to really sell off. And that's why I'm thinking that this would be kind of the prototype for what we're going to see next week. And that is, if I can get it, and what I love is a short pop and spike, maybe a gap up, and that gap up continues to watch a short squeeze roll. Normally it is intraday. That is that you'll get maybe a pop and maybe even a follow-through day, and then the third day you get a nice big candle at it. But all the volume's in the morning, no volume throughout the day. It rolls over and closes lower that day, and normally that's the place to go plant your flag and say, okay, it's time to go short this market. Problematic at best to go chasing these, but it's, and especially with light volume. There's a saying, I put it in the newsletter this morning. Maybe I can find it here if I pop it up real quick. Today is the 21st. Here it is. Oh, maybe it was in yesterday's newsletter. I thought it was. Maybe I'll find it. Oh, we're running out of time. Here it is. The desire for constant action, irrespective of underlying conditions, is responsible for many losses in Wall Street, even among professionals who feel that they must take home some money every day as though they were working for regular wages. Of course, that's Jesse Livermore. But we will see you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.